Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today's topic is an essential one: Top 10 Common Mistakes Traders Make. Let's face it, mistakes are part of the learning curve for every trader, especially when starting out. The key, however, is to recognize and avoid these pitfalls as much as possible. In this episode, we'll break down the most common mistakes traders make and, most importantly, how you can steer clear of them. Let's dive in. When new traders step into the financial markets, it's natural for them to make mistakes. After all, trading is a skill that requires discipline, patience, and practice. However, being aware of the most common pitfalls can help you fast-track your progress and avoid unnecessary losses. Whether you're trading forex, commodities, stocks, or indices, these mistakes are universal. Let's start with the top 10 errors that traders make and how to sidestep them. Number 1. Lack of a trading plan. Many traders jump into the markets without a clear plan. Trading without defined goals, risk parameters, or strategies often leads to impulsive decisions and losses. How to avoid? Create a detailed trading plan that outlines your entry, exit, and risk management strategies. Number 2. Over-leveraging. Using excessive leverage can amplify both gains and losses. Many traders underestimate how quickly leverage can wipe out their accounts. How to avoid? Use leverage conservatively and ensure you fully understand the risks. Number 3. Failing to use stop-loss orders. Ignoring stop-loss orders can result in significant losses when the market moves against you. How to avoid? Always set a stop-loss order to cap potential losses on every trade. Number 4. Chasing the market. Many traders panic when they see rapid price movements and enter trades late, often at unfavorable levels. How to avoid? Stick to your plan and avoid trading out of fear or greed. Wait for the right setups. Number 5. Trading without risk management. Risking too much capital on a single trade can lead to devastating losses. How to avoid? Never risk more than 1 to 2% of your trading account on a single trade. Number 6. Overtrading. Trading too frequently, either out of boredom or greed, often leads to poor decision-making and higher transaction costs. How to avoid? Focus on quality over quantity. Only trade setups that align with your strategy. Number 7. Ignoring market trends. Fighting the trend or trying to time reversals can result in repeated losses. How to avoid? Respect the trend and trade in its direction unless you have a solid reversal strategy. Number 8. Failing to keep a trading journal. Without tracking your trades, it's hard to identify patterns in your performance or learn from your mistakes. How to avoid? Maintain a journal to record every trade, including your reasoning and outcomes. Number 9. Letting emotions dictate trades. Fear, greed, and impatience can cloud your judgment and lead to irrational decisions. How to avoid? Develop emotional discipline by sticking to your plan and using proper risk management. Number 10. Lack of education and preparation. Many traders jump in without fully understanding the markets or the instruments they are trading. How to avoid? Take the time to educate yourself, whether through courses, books, or mentorship, before risking real money. So, how can traders avoid these common pitfalls? Here are a few actionable steps. Education is key. Dedicate time to learning the basics of trading, market analysis, and risk management before diving in. Start small. Begin with a demo account or trade with a small amount of capital to gain experience without significant financial risk. Right? Stick to your plan. A well-thought-out trading plan is your roadmap to success. Avoid deviating from it no matter what the market is doing. Manage your risk, use stop-loss orders, limit your leverage, and diversify your trades to protect your capital. Keep emotions in check. Trading is a mental game as much as it is a technical one. Develop discipline and don't let emotions drive your decisions. Learn from mistakes. Review your trading journal regularly to identify what's working and what needs improvement. Trading is a journey, not a sprint. The more you focus on avoiding mistakes, the better your chances of long-term success. Now that wraps up today's episode on Top 10 Common Mistakes Traders Make. Remember, every mistake is a learning opportunity, but by being proactive, you can sidestep many of the most costly errors. Thanks for tuning in. And in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.